Hello, Uncle Jim here. Today I want to share with you how I'm dealing with the bear market, the steps I'm taking to minimize my risk, as well as one of my favorite trades during these crazy times. So stay tuned. I think you're going to enjoy what I have for you today. Now, before I jump in and share with you my favorite trade, I do want to talk about some key points. First of all, with all the rate hikes, it looks like overall the market, even stocks that were holding up pretty well, seem to be being hit pretty hard. And with the fact that the Fed is planning to do another rate hike in November and probably 3/4 of a point, and probably even the last one, there's potentially another rate hike in December. Um, it's just major headwinds against the market. I don't know that we've hit bottom yet. I know we're very close to hitting bottom. My guess is we will probably hit bottom and go a bit lower uh, going into the fall. I do think we will at some point hit bottom, maybe mid October, late October. Of course, no one really knows. This is just my opinion, but I just see that going on with the rate hikes. I also see the fact that so many baby boomers are retiring. It's some outrageous number every month are retiring, and that's going to continue till 2030. So the labor market, I think it's going to not act like it did in past years. The fact that so many people are retiring, there's going to be a need for more workers going forward. Probably the rate hikes won't necessarily impact the job market as much as it did in previous recessions when they had to you know either raise or lower the rates. I mean, currently they're raising the rates, but with a recession, a lot of times the unemployment would go up. But I'm not so sure that's going to happen as much in this recession. I do think the Fed's going to cause us to have a deeper recession. So, what's important for people to understand is to not take too much risk. I'm limiting my risk. I'm taking less risk. I'm going to do fewer trades and try to make a bit less money than I was planning before. I had mentioned in previous videos, I'm going to when I do sell a cash secured put or a vertical put credit spread, I'm going to use lower deltas. I was originally 20 delta, then 15. I may even look at around 10 delta. In the actual trade I share at the end of the video, it was a 20 delta, but BKE, and you can actually see on the screen here, they have a huge potential special dividend coming in December, so I do think it's a little less risky. So in the sense of BKE, I still stuck with the 20 delta, but with everything else, I'm looking at doing lower deltas and minimizing my risk. Another way of doing that is if I have cash secured puts out there, I may go ahead and buy some puts to turn them into vertical put credit spreads. I've had a few things get assigned, like Intel got assigned to me, and I still have the puts, and the puts are significantly above the price of Intel. So I'll probably assign those to someone before too long and go ahead and realize whatever loss I may have with those. But I think Intel's around 28 or 29 currently, and the puts that I have are like 33. So any of those cash secured puts, if I can buy a put inexpensively to protect me on the downside, I would definitely look at that. And I encourage other people to do that too. Um, and then I'm going to go ahead and take some losses. I've had some good trades, and I do have a few losses that I need to rebuild up my cash with some of these assignments recently. My cash that I have in one of my accounts has gotten a little bit low, so I'm going to go ahead and take some losses, and hopefully that'll lower my tax bill. It'll impact the gains that I had earlier in the year. So I encourage other people to do that too, to minimize your risks and take those necessary steps. So now, with that out of the way, let's talk a little bit about this cash secured put that I did in BKE, which is Buckle. I'll go into more detail in this next part of the video. And I encourage you to stick around because, like I said before, they're going to be paying a special dividend, which potentially could be quite large. It might be anywhere from $2 to $5. They paid a special dividend last year of over $5. So stick with me. Let's jump into that next part of the video. I'll actually show you some information about it and actually do a trade. So stay tuned. Let's jump into that next part. Okay, I've opened up my Schwab account and brought up Buckle. Buckle is the company that I wanted to talk about. I've had a whole lot of success actually selling puts on Buckle, and it's a good company. They pay really good dividends. Let's take a look at them currently. So they're closer to their 52-week low versus their 52-week high. So they're at 32.30. The 52-week low is at 26.50. Um, you can see it's been a while since they hit the 57.10. It was pretty early in the year, or actually end of last year. But earnings, they're still doing quite well. They've actually beaten the most recent earnings. They actually did an actual of $1.01 compared to 90 cents was the estimate. So, and they've got a really low price earnings. I think for the overall year, they're going to be slightly down. Let's look at for the overall year. So down just maybe 1% to 1 to 2% or 1.5%. So 516 versus 509. But for considering what we're going through this year, that's quite good. Now, what I really find interesting with them is their dividends. So if we come down here, they pay a special dividend, and last year, I believe the last 2 years, they've paid it in December. Let me show you what I mean. And it's quite large. So the gray here is actually their special dividend. The blue is their regular dividend, and their regular dividend is like 4.5 to 5%. But these special dividends have been crazy. So if we look at 2021, they actually paid a special dividend of over $5.65. And that was for anyone who um, owned the stock at the ex-dividend date, which was December 17th. I believe they're going to do this again this year, but it's going to be December 16th. Um, I don't know. I doubt they'll do 565 again going into a recession. But every year they've done different amounts. The previous year they did actually two special dividends, $2 and 125. So if they do something similar to the last couple of years, they could potentially pay a 2, 3, maybe $4 special dividend in December. So it would be a good stock to own at that point. So that's my goal. I'm trying to pick it up where it's either assigned to me or you know, I'm earning good premium with it. But I have a feeling come December, if it's getting near that special dividend, it's probably going to go up quite a bit. So it's going to go, if it's anywhere in the money, it'll go out of the money. So I feel like I can take a little bit more risk with Buckle. And Buckle, if you're not sure who they are, they're actually jeans maker, Wrangler. They do quite well. I believe they sell a lot of their blue jeans in Target and different retailers. And they've done really well. I think they've got the most recognized jean brand out there. Um, so that's just a little bit about them. So, and again, with their special dividends, it's kind of crazy. So let's jump over to, let's not do the trade one yet, but let's look at the option chains. And the one I'm looking at is November 18th. So I currently have this set to Greek. So here I could also do puts, and we can see the puts for November are doing quite well. There actually been some volume, not great volume, but a fair amount of volume. I believe, yeah, come December there's even more volume. And I'm going to focus on this November 18th, and let's actually change that back to Greek. So for Schwab, you can change it back to Greeks this way so you can see the delta. I'm primarily interested in the delta, which is just underneath the P. You'll see delta right here. And I'm looking at this 20 delta, so this 2750. I could also do the 11 delta, but that's almost too low in my mind, again, because I feel like 2750 is a steal if I could pick this up. So that's what I'm looking at. That's the delta that I'm interested in. And again, with delta, it's it's a 20 delta, so I look at that as a 20% chance or probability it'll expire in the money, or an 80% chance that it'll expire out of the money. And they do it as a negative, but in a way, I like to just remove that negative and think of it as a 20 delta or an 80% probability it'll retire or expire out of the money. So let's actually jump into the trade. And so here you can see it. I'm doing it as a cash secured put. Now, one thing that I haven't talked about recently is I can do this as a cash secure put, but I could always buy a put later. So I noticed that the $20 put, if I purchased it, is like $20. So I could spend $20 and turn it into a vertical put credit spread, and I wouldn't need as much cash. Here you can see I have about 18,000 I can trade, but I'm going to currently just leave it as a cash secured put because again I'm almost using this like the wheel, and I could actually go up if I went up to I believe 30. Yeah, I could earn $1.40, $1.50, maybe even as high as $1.60 if I did it at 30, but that's really close to where it is currently. So I'm going to take a little bit of less risk, and and the main reason being is if it goes way down and I do it as 30, I'll get assigned at 30, but maybe I could get assigned at 27.50 and pick it up at an even better price. So I'm going to stick to the 20 delta, which is a little higher than the deltas I've been using recently for puts. And I'm perfectly fine with picking up 70, 75, $80, something along those lines. And again, I do it as a market order. And I want to do sell to open. So here I would pick up $75. And since the market has been in such turmoil lately, I'm going to only do one contract at this time. I may do another contract tomorrow or even next week, depending on what happens with the market. We're hitting near all-time lows. Actually, it looks like the Dow's a little better, but we're within a couple hundred points, I believe, in the Nasdaq and the S&P for reaching new lows. And with the Fed continuing to racket up rates, there's some major headwinds. So I'm going slowly. I'm not trying to make as much as I have in the past. So let's go ahead and review the order. And it's telling me I would pick up $74.35 after commissions, which is what I want to do. So let's place the order, and let's actually do order status. So here it is, order status. I picked up $75. I didn't get any improvement, but that's what I was shooting for. I was shooting for $75 for this trade. Um, so if it gets assigned, you can almost look at it as 75 cents lower. So if it gets assigned, then it would be 26.75 is what I would pick it up. And at that point, I believe it's almost a 5% dividend. And if by chance the stock price goes up, I may still buy Buckle directly because of being able to pick up that huge dividend before, I have to own it before December 16th. So this is my favorite stock to be trading currently. I've done a lot of trades with Buckle and it's worked out quite well. So I hope you enjoyed this. As always, please hit that like button, add a comment or a question if you have one, and please subscribe. So I hope you have a wonderful day. Thanks for joining me.